The sentiment for Tesla stock has changed dramatically ever since the annual shareholder meeting. Not only have we seen the stock jump from 182 to now 230, we're also seeing new investors jump on a bandwagon. One such investor is Stephen Gengaro of Stifel, who started covering the stock just a week ago. He's now making the rounds on CNBC and Fox News, and it's great to see new Tesla bulls come on board. I've got Hans Nelson joining us. He has his own YouTube channel. You should check them out at Hans C. Nelson. He does even deeper dives, and you'll see his knowledge on FSD, on compute, AI is unparalleled. Thank you so much for joining me, Hans.
Thanks for having me, Herbert.
So we've been talking about this. We finally see the stock making jumps the last few days, today also. So if you look at the stock, as we're filming this on the Tuesday, July 2nd, somewhere in, what is it now? About 9:30 a.m. in the Pacific time, you can see it jumped. So now we're around 228. It went up about $18, almost 10% jump. So this is big news, and you've got Elon commenting. Here's Elon. First, Yaman says, what do you say to Tesla bears? And Omar from Hallmark's catalog joking around saying, whatever. But Elon replied, laugh. Then he goes, once Tesla fully solves autonomy and has Optimus in volume production, anyone still holding a short position will be obliterated, even Gates. So I'm assuming he means that Gates has billions of dollars, but even he will be obliterated if he does this, because Tesla's going to solve. This is the confidence, though. This is what I'm going to point out. The confidence of Elon that Tesla could and will fully solve autonomy and will have the bot in volume production. What a great statement. What do you think, Hans?
I love to see the confidence from Elon. Obviously, he's also been confident before in the past, but I think line of sight now to actually fully solving FSD is on the horizon. And just it's a combination of a number of things. The development of the AI field in general, both with generative AI, but also just all of the development that NVIDIA has done on the hardware to provide training compute. And now that Elon has access to these very, very large compute resources for doing this neural net training, the results that they're seeing continue to be very, very positive in just the quality of the models that they're able to train and put into the cars. There are definitely some challenges still ahead. We see, 12.4 seems to be taking a little bit longer to roll out than some people expected. Honestly, it's not surprising given the way that it works to train a neural network, that your first iterations are going to be plagued with some issues, and you're going to have to figure out a way to rein that in. And so they are on this process of discovery, and there's lots of engineering work that remains where you just have to go down a list of problems and you kind of have to solve them one at a time. But I think what Elon is seeing is that all of the problems that are left are not necessarily problems that require scientific or, understanding level breakthroughs, that it's just a matter of continuing to turn the crank, continuing to do what they've been doing, and continuing to solve these engineering level challenges, which they are very confident can be solved, but they just require, time and resources to solve. And everything that I see when I look out at the overall field seems to confirm in my eyes that he is correct in that assessment, and that we have basically all of the ingredients, and that it's just a matter of continuing to press forward, collecting the data, trying different ways to train the neural networks, trying different ways to QA the different neural networks, and then figuring out ways to compress that down and get it to run efficiently and effectively on the different computers that Tesla has in the vehicles.
Yeah. The cool thing is we don't even need to be talking about the far future quite yet. Let's talk about the near, because we're gonna watch a video of Stephen Gengaro, a new institutional analyst who's now covering Tesla. More and more and these new people are coming on board, buying Tesla now. We'll listen to what he's saying. But also Dan Ives pointed out that after the shareholder meeting, there's this overhang that came out. Let's watch him first. So here's what he said in June 13th, which is a couple weeks ago. He said, the 2018 comp package overhang is now over, as this has passed shareholder approval, along with the much anticipated move to Texas, leaving the Delaware nightmare in the rear view mirror. This all comes down to Musk is Tesla, Tesla's Musk pivotal outcome. That was what happened a couple weeks ago. What was your comment, or what did you think
Yeah,
Dan was referring to there? Yeah.
there was an associated interview that he did that I was having a hard time finding, but I think he said at that point in time that he expected there was about a $40 overhang on the
Mhm,
stock that was
mhm,
associated with the uncertainty around Elon Musk's pay package, and he expected that to be lifted. And then, of course, that was when the stock was around, 170 to $180, and
mhm,
now up at $230 today.
mhm.
We've moved more than that $40 that Dan was talking about. And so it's a great call on Dan's part. And I love to see the results that we're, starting to build, and the sentiment beginning to shift in favor of people like Dan, who are, pretty sharp.
Yeah. So today, Tesla reported production delivery numbers, blew everybody's estimate away. Stocks jumped. But this is what Dan was saying just a few days ago. Let's watch a little bit of this, about 1 minute video.
Now is the aforementioned Dan Ives, managing director, of course, at Wedbush. What do you mean the recovery story has begun?
The comeback story for
Did it
Tesla,
need a comeback?
I think it did, because they had massive headwinds in China, and now we're seeing the comeback play out. Now, 2Q deliveries next week, I think that's really going to be the last of really some of the worst that we've seen in China. We're starting to see a mini recovery in China. The comeback kid story for Musk is starting with, of course, Robotaxi Day in August. I believe this is a stock that's going to have a massive run second half of the year.
What do you think has been then that headwind that you talked about? Is there one thing you could point to?
Look, EV demand's clearly been soft globally, but it's really about China. I mean, China was a massive tailwind for years, became a headwind, but now, Brian, you're not seeing those price cuts anymore. So you're starting to see stabilization, China demand starting to increase. And I think the stock's telling you, and we believe next week's just another sign of it, is that the worst is in the rearview mirror for Musk and Tesla.
I want to.
Yeah, that's why I wanted to play that, because he did that interview 3-4 days ago. Of course, now with the production delivery, that this is a comeback story. The worst is over. What was your interpretation of what's happening?
Yeah, not only is, the Chinese numbers looking great here in the back half of Q2, but also I think that does signal just globally the revitalization of demand for Teslas. And it also, the gap in between production and deliveries, that, Tesla produced 411,000 and then delivered 444,000. There was this huge narrative. So many people said that all of Tesla's problems were demand, that they were building up this inventory, that the reason that they couldn't deliver those cars was because no one wanted to take delivery. And obviously that was not the case. There were so many one-time items that occurred in Q1 that made it difficult for those cars to be delivered within the quarter, even though customers were secured. And so by delivering so many more cars than were produced in Q2, it really puts the nail in the coffin on that narrative. And it shows that Tesla is executing at a very high level on all of the factors that are within their control. I mean, delivering more vehicles than you produce in a quarter is a difficult challenge. And so for their supply chain team to be able to clear that entire backlog from Q1 and get those into the hands of customers inside of Q2, plus all of the vehicles that were produced inside the quarter, essentially, just shows that that demand is there. It kills that narrative, and it boosts investor confidence in Tesla's ability to execute at this point in time, and in the condition of the market and demand for Teslas.
What was your thought with the production delivery coming out? Do you think that Tesla's the jump was mostly because of auto, or do you think that the anticipation of FSD is there already?
I would say that, there probably is a marginal amount that is due to FSD, that people are getting a little bit more excited. We do see more people kind of coalescing around the idea that FSD is going to actually be solved, that it's going to be massive in terms of its potential revenues for Tesla. And they're willing to take long-term time horizons and say, we don't know exactly when it's going to happen. Maybe it's 5 years from now, maybe it's 10 years from now, but we're willing to do a DCF out to those types of time horizons at this point in time and bet that there is some probability that it's going to happen within 10 years. And we want to go ahead and be exposed to the stock over that period of time so that we can enjoy the returns that come from that. And part of that is going to be boosted by the fact that it seems like we're kind of at the tail end of this macroeconomic cycle, that we should begin to see rate cuts, and not just one, but potentially multiples, and that we're beginning to enter into a revitalized just macro environment for auto in general that comes with lower interest rates. So, peak interest rates, and the shifting from a very negative auto cycle into a positive auto cycle, I think helps some more investors take those longer view time horizons at this point in time that are required in order to use FSD as an investment thesis that you're willing to put some money behind. But all of that said, I think that's going to be a very small group of people compared to, I think the vast majority of the stock performance to date is just changing sentiment on the pure auto business of Tesla.
Thank you.
And that is a good signal, because it shows how much room that we have left to go once more and more people really get onto that train. And I mean, just the strength of the business, it's really all about trajectory. That when people were looking out into the future and they saw Tesla sales going down instead of up, they're scared and they're running. And now that deliveries and production are going up instead of down, they can be excited again and they can get back in the name. And all of that, just on top of, like Dan was saying in that tweet earlier, having that overhang lifted of, is Elon going to be the CEO of Tesla for the foreseeable future? Are we going to be able to compensate him and motivate him? And all of that stuff being out of the way, it just clears away all the distractions. And I think basically any and every FUD narrative that has been in play for the last 6 to 9 months has basically been put to bed over these last 3 months. And so that just helps overall sentiment in the core auto business return to kind of healthy levels. And I think that's where we're at today.
I agree completely. So thank you for saying that, because, we're going to show a video here of Stifel. Just yesterday, he was interviewed. He's a brand new investment firm that started covering Tesla. They started buying it just last week, and he's been on CNBC, Fox News. And you'll see that he still talks about auto. He talks about electric vehicles. They still are. But after today's P&D numbers, they're going to have to, specifically energy numbers, they're going to have to talk energy now. He's going to have to talk about FSD now and robotaxi as 8.8 comes. So, this is the point, right? More and more institutional investors are starting to buy. This is one example, Stifel. And he says legacy car makers don't have the EV knowledge to adequately compete with Tesla. There's multiple layers to Tesla that you have to look at. And one is really the FSD side and what Elon Musk has done from an AI perspective, and what that leads to. What he says here is car makers can't compete with Tesla. The cost, range, and charging are top 3 challenges. Tesla's well out in front of other car makers. There's multiple layers, AI, FSD, robotaxi. He gives a price target of $265. This was yesterday, so let's watch it.
Legacy car makers don't have the EV knowledge to adequately compete with Tesla. He joins us now in the last couple of weeks, launching with a $265 price target and a buy on the stock. Why? What do you love about it?
So, as we were just talking about, when you look at the company from a vehicle perspective, it's probably worth about where the stock is right now. But there's multiple layers to Tesla that you have to look at. And one is really the full self-driving side, and what Elon Musk has done from an AI perspective, and what that leads to both from a full self-driving piece, and also down the road, these robo-taxis, which could become a pretty big contributor to the company.
They could, or they could not. So I also see those as potential risks for investors.
Yeah, there's no doubt. Like you have to have a vision when you buy Tesla that you believe in the AI piece of the story and what they're doing with FSD, or with full self-driving. Because what full self-driving ultimately leads to is the ability to have these robo-taxis that, and we look at it at 2035 contribution discounted back way. So we're taking a very long-term perspective on the robo-taxi side. On the full self-driving, really phasing it in starting around 27, 28. with pretty low adoption rates.
But are you concerned about demand? As we see now, about half of EV users want to switch back to gas-powered vehicles.
Yeah, so there's three major challenges right now. And we've seen a slowdown in overall EV sales over the last 6 months. The two biggest are probably range anxiety and charging, right? And they kind of go together from a charging infrastructure perspective. And the other one is cost, right? And so what we've seen recently is we've seen declining cost of the vehicles. And the big driver, or the big next driver for Tesla, is going to be the Model 2 or the next gen vehicle, which is probably going to be a mid $25,000 price point, which makes it kind of more approachable for a lot of buyers. And then the charging infrastructure piece is a big piece. And it's a bit of a chicken and an egg situation here, right? Where it's hard to buy the car if I'm worried about charging it. But it's also hard to build chargers that are uneconomical without government funding. And the government funding has honestly been slow, right?
Yeah, we have to go, but just quickly, does Tesla have any competitors?
There are competitors. They are well out in front from a technology and from a supply chain perspective. There are competitors coming.
Okay. Stephen, thank you so much. Really appreciate it.
Thank you.
Okay. So first of all, that stat about the 46%, that's other electric vehicle companies, not Tesla. Tesla has like 96% people who buy it want to keep buying. And because of supercharger, because of all these advances, we'll talk about that tomorrow. But anyways, it's great. You got a bull. He's addressing these dumb questions that keep getting asked, but they need to ask them. What was your thought about how he reacted there?
Yeah, I really enjoyed his commentary overall, and I feel like he makes great points. Obviously, a lot of them reflect the types of comments that we make here on this channel all the time. So hard to hate on someone who agrees with you so much. That said, I thought it was interesting that he didn't even mention the energy piece. And with this P&D report and the growth in energy, that really, I think, is pretty surprising. Like, we expected growth, but we didn't expect more than double any, deployments that have been delivered in the past. So I think that's going to have to continue to grow in the minds of investors, and that more and more you'll hear the Wall Street types talking about that, because that was such a big beat on this quarter and really signals the forthcoming growth for the energy business. And I mean, that is going to be material to the bottom line this quarter. And because it's so material to the bottom line this quarter, I think it's really going to drive upgrades on the stock over the next 3 months as people factor that in and realize what the cash flow to Tesla coming out of the energy business is going to look like moving forward. And this is a very, very sustainable business from a growth standpoint for Tesla. The demand for these mega packs and just this long-term energy grid scale storage is going to be something that I think shocks a lot of the world, that we just need this product in order to do the types of things that we need to do from a national security standpoint, from just a technology standpoint, from an infrastructure standpoint, to grow the amount of energy that is available on our grids as we continue to create technology that just uses more and more electricity.
So we did a show, Hans and I, along with Jeff, a little bit earlier today, everything about the new production and delivery numbers, including a huge kind of explanation, lots of charts about what happened with energy. This interview with Stifel was yesterday, so he hadn't seen it yet. But yeah, we're going to see more of these analysts. They cannot ignore energy anymore. It's over. They need to be talking about it now because the numbers just doubled and it's so significant. So this conversation from Tom Nash, I thought was interesting. Tom said this in response to that Stifel video. He said, there will be good electric vehicles in the market in the next few years. However, competing with supercharger network effects, battery technology, self-driving, and software in general will be nearly impossible. By the time that these competitors catch up to Tesla in 2028, Tesla will be on its next S-curve. What's your thoughts on that statement?
Yeah, I mean, it is great to see pretty good electric vehicles.
I'm sorry. I just noticed that it says July 9th, 2022.
Do you want to cut that one out?
No. I think this is great. Okay. I just wanted to, it's interesting because I thought that this was in response to Stifel, which I thought I saw right there. So they must have just forwarded. But the point is it's still true.
Well, he may have, retweeted it in a reply to that. It is true. And I think that's one of the thing, one of the points that Stifel made was that there are competitors coming but that they're not really going to be fully competitive with everything that Tesla does. And I think that while we do see decent vehicles coming out of China right now, we still don't see anyone who is able to compete and be profitable. Like, that is so hard. And anyone who is able to offer competing products but cannot do so profitably, that's not a company that can sustain that for long periods of time. And that means that that's not a competitor that Tesla ultimately has to worry about over a long period of time. And so I mean, I do on the one hand feel like it is inevitable, given 10 years, that there will be other vehicles that can do some of what Tesla can do fairly well. But I don't see anyone who is like, we'll just go back to the Stephen Mark Ryan analogy that, it's Tesla's like Usain Bolt. He's already out in front. He's accelerating. He's running faster than anyone else, and he's still moving faster and faster and faster. No one else is going to be able to catch him because they're not even capable of going the speed that he's going now, much less accelerating at the rate that he's accelerating. And that's going to continue to be the case for the next 10 years because Elon Musk is driving this company towards an AI powered future at a rate and with an amount of conviction and using all of the resources necessary to do that no one else in the auto industry is doing. And so, no one is going to be able to compete with them on those levels the way that is going to be necessary in order to hold back Tesla.
Yeah, exactly. Appreciate that. So, P&D numbers came out today. I was just going to show some of that just to keep people aware of what's happening. We just reported it this morning. So let's go here. And some of the big numbers were, this huge boom, boom, boom right here. This energy right here. This is, let me show it to you guys. This jump. So Q2 went all the way up to 9,000 megawatt hours. Just crazy how big this is. What a jump. So, right? You don't, at this point, institutional
more
investors,
than double what
they're gonna have to talk about this, aren't they?
Previous number had been. And it's just massive growth. And we had talked, there was a lot of noise about 12 months ago or so where people were expecting this type of growth in the energy business, but they were expecting it sooner. And I think that a lot of that excitement was just due to a lack of understanding about how these energy scale utilities operate and the speed with which they can adopt a new technology like this. The interconnect process that it takes in order to get something like this connected to an existing grid is a long and arduous process, and Tesla doesn't actually get to recognize all of the revenue from those and count them as necessarily delivered until all of that process is complete in the vast majority of cases. And so the results that we're seeing in the business are really kind of lagging results. And now that I think we're catching up to the beginning of the Lathrop ramp up is showing at a much higher, stronger level in the financials now. And I think that's going to continue to be the case because I think, Lathrop has continued to ramp up their production over time, and that like these numbers are here to stay. And this is the first, it's just one mega factory that is operating.
Yeah.
It's a tiny footprint, and we've already got one that's in the works for China. I'm sure there will be announcements for many more in many more regions over the coming decades. Like, this is a massive product for Tesla. And like I said earlier, for just the technology and the availability of cheap, clean electricity to the whole world, in the coming decades. So very excited to see this growth. And I think the comment that I made earlier today was, I think this is the beginning of a hyperbolic exponential move. And I'm going to stick by that. I think that it's early, but I expect this to just become a huge, massive sector of the business for Tesla.
Okay. So I think our summary of what we both believe is that the stock has jumped from 180 to 230, but it started its move a couple of weeks ago after the shareholder meeting. Some of these overhangs have been starting to be resolved. You've got institutional analysts. First of all, you saw that the current institutional analysts who's so been bearish have turned, and they started becoming very bullish. Then you got new institutional firms buying Tesla, and then it jumped. But after today's P&D, now they're not just going to talk about car going up. They're going to be talking about energy. They're going to talk about robotaxis coming up at 8.8. These are going to be the new that we both feel like hasn't been even baked in yet. It couldn't have been because nobody would bake it in if they felt that the P&D numbers were still falling, if China was falling, if the EV story is reversed, those kind of things. But actually now those are put away bedside. So
Why
comeback
is it
happening.
exciting for Tesla to produce a cheaper, higher volume product if their demand is falling off of a cliff? Well, if demand's not falling off of a cliff, but if it is in fact growing, then all of a sudden those new models that Tesla has talked about bringing to market in 2025, which was sooner than most analysts expected, now that story looks a lot more exciting because you believe that the demand will be there to sell through those vehicles. And just like that's only one piece of a whole number of, it's just a symphony of things that are going correct for Tesla right now. And it's driven by excellent execution in the business and controlling everything that they can control, doing the best that they can do. Obviously, that doesn't mean that everything always happens as quickly as we would like. But I'm still just continuing to be impressed by the overall execution of the business. And then it shows, a lot of other EV makers were supposed to be delivering Tesla killers in 2024 and 2025 and catching up to the sales levels that Tesla had back in 2020. And what we've seen over the last 6 months is most of those competitors are really falling off in their volume anticipation and guidance. And it's just clear that they are not able to deliver on their promises for EVs, and that while things are a little bit slower right now for Tesla than expected, overall they are, for the most part, able to hit their expectations over time. And it's continued growth from here.
I think that within just a couple of years from now, we'll remember do you remember when Tesla was a car company? It's an energy company, it's an AI company, it's a bot company, it's a robotaxi company. All of those will surpass electric vehicles. And we'll go back and go, remember when Amazon started with books? And remember when Tesla started with, you did a post about that one time, and Elon agreed with your post.
I've said that actually since 2018, and it's taken, quite some time to, or maybe it was somewhere between 2018 and 2020. It just hit me. I was like, cars are for Tesla what books were for Amazon.
Books were for Amazon.
That you've got to start somewhere. You've got to figure out how to get it's like a very difficult product. And you've got to get it right, and you've got to make it technologically empowered. And once you do that, you lay a foundation that then you can extend into other areas. And while everyone else thought that the EV business was a terrible business to be in, it allowed Tesla to create and defend this incredible business where technology was being produced that can then be, brought into these other products, whether it's the AI focus that Tesla has, or energy, or the massive vehicle lineup that they have, just all of these other things that they have gotten into over time. And that then the Optimus bot, which is potentially the most world altering, technology. I mean, there's a bunch. Neuralink is another one that's pretty crazy. And, got to talk to Nolan the other day, and that one blows my mind as well. But as far as Tesla's concerned, like the Optimus bot, I just don't even know how to think about it. I think about it a lot, and I still don't know how to properly size the opportunity that is in front of Tesla and their capability to do what, they're in a position that no other company in the world is in to take advantage of that next mega trend. And the reason that they're in that position is because of the foundation that has been laid for the last 20 years in automotive. And I mean, their ability to have the culture, their ability to have the technology, their ability to do these impossible things. We've got a team that has a history of being able to execute on those types of goals and ambitions. And so it just makes me excited to continue to watch this story unfold. And like I said, I think that the history of the stock of Amazon is kind of a good corollary, except cars are a lot more expensive than books. So if you can extend into other items that grow your business off of large ticket items like cars, then you're talking about just ridiculous numbers.
Tesla was kicked out of the Mag 7. Now it's called the Mag 6. Eventually, there's going to be a Mag 1, magnificent one. Okay, thank you so much, Hans. Appreciate you. This is good. Talk to you soon. Bye, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.